Love on the loan deck. The bond market's blinked, but mortgage rates ghosted. Broadcasting live from the SS Equity Dreamliner, where yields flirt, rates ghost, and buyers are stuck on deck wondering if it's ever going to happen. Hey, the 10-year Treasury dropped a love letter into the ocean, and the mortgage rates swiped left.
Yeah, Manley. People keep saying, but if bond market dips, shouldn't the mortgage rates fall in love too? Cute theory, wrong movie.
Hey, this isn't the Notebook. It's the Love Boat, Mortgage Edition. And right now, rates are emotionally unavailable.
Yeah, we're talking about heartbreak, hesitation, and how to avoid getting friend zoned for your dream home. But to go out now and use a weapon like the DOJ and say, well, he added too much marble to the bathroom throne, let's get him out, you got to do better than that.
The financial equivalent of eating Tide Pods. Looks fun, ends in regret.
So I think what we're seeing now is we're seeing pawns be put in place for this chess game, and I do think the rate's going to drop. Do I think it's going to take 1 to 2 years to see? Yes. Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Welcome to the Mortgage 101 podcast with Anthony and Manley.
Hey, welcome aboard the Mortgage 101 podcast. I'm your bartender of bad financial advice and broken pre-approvals.
I'm Anthony, your cruise director of closings. Today's itinerary includes choppy bond waters, rate confusion, and just enough sarcasm for you and Manley to keep me from refinancing with your cousin Larry.
Not cousin Larry, man. That guy's a tool. Hey, guys, the bond market blinked and it got ghosted. We've been there, right? We've had those ladies that just said, enough of you. The 10-year Treasury, it dropped from 4.433 to 4.371, I think. That's basically the market whispering, hey, folks, I'm softening up.
Yeah, man. Mortgage rates were like, okay, still floating at 6.7, not even pretending to care. Basically, we're seeing the most vanilla, lethargic soap opera play out in front of us that we've ever seen. Like the absolute lethargic scene of like, hurry up already. That's exactly what we're seeing play out with this dang Fed rate debacle of we gotta have them higher for longer. I mean, yeah, that's all great, but month after month after month of steady inflation, and you're still touting that? Listen, Powell, read the room, buddy.
Read the room. I've been saying that all along. Read the room, man. The natives are getting restless and we're about to take somebody to the burn pile. Oh, Joyce. Hey, imagine planning a surprise date and your date replies with, sorry, I'm emotionally unavailable due to inflation. That's where we're at. This inflation thing is absolutely crazy. Inflation is holding us back, but it's also the reason that it's holding us back because we're making it worse with the Fed sitting on their butts, putting their hands underneath their seats and saying, hey, folks, we're going to let this last longer, higher for longer. Higher forever, it feels like.
Yeah, I mean, inflation's at 2.7 and the feds are still acting like your friend's dad who shows up at the prom to make sure no one's having too much fun. It's like they're wanting people to restrict their spending and they want people to feel scared and go, oh, we have to save, yet they want a prosperous economy. So listen, Powell, you can't have your cake and eat it too. So, enough's enough. Inflation's in check, insolvency's in check. You stopped quantitative easing, you started quantitative tightening. They stopped you there. Now what's next? Make it more affordable for the people. Make rates more affordable. Yes, we've been taking it on the chin. Yes, we've been saying, you know what? Yes, it's painful to borrow. It's painful to use a credit card. It's painful to buy. But people are still living. They're not going to stop and wait for the perfect opportunity. Some are, most aren't. And that's why we're seeing the world continue to turn. But Powell should not look at that as going, hey, they're still spending, therefore we can tout rates longer for higher. No, you are dwindling people's liquidity and you are thinking that that's going to stop them and they're not. So you got to have a different shtick because this is not working and people are getting restless.
Dude, right now, I feel like we're in the movie and the villagers are all gathering and saying, let's get the ogre in the swamp. And Powell's the ogre. And the donkey's out there trying to protect him because he's like, hey, buddy, this stuff's going to go south. You might want to move your stuff. But
There's something
you know,
weird
like,
too. I mean, I started seeing like, so Trump and the administration have to be careful, right? Because there's a reason why there's separation of powers. And so what they don't want is the executive branch to have a piece or a seat at the table with monetary powers, right? And so he has to stop short of firing him because he doesn't feel he's doing his job, because he's got to be separate. But I saw something the other day on how the DOJ is bringing up charges or recommendations because they did renovations for the feds for like their kitchens and their meeting rooms, and they spent too much money, and now they are recommending charges. And I'm like, I mean, come on now. I mean, I know you want the guy out, but that's not the way to do it.
all right, he spent an extra $100,000 on a new kitchen countertop, and he shouldn't have.
I mean, he's definitely making it hot in the kitchen that Powell's in right now. He's definitely making it like, listen, buddy, I don't like your, inflation is transitory from the start all the way to higher for longer. But to go out now and use a weapon like the DOJ and say, well, he added too much marble to the bathroom throne, let's get him out. You got to do better than that. And the American people see it. And so there's got to be a different way about it. I think we just need to continue to push pressure on him to say, listen, we're doing what you say. Nothing is changing. You need to change your stance and your position. End of story.
Why aren't rates catching feelings? I don't know. This is what's going on. Everyone thinks the 10-year Treasury and mortgage rates are soulmates, but they're more like exes who still argue in a group chat. Seen them, been there, done that.
Yeah, I mean, mortgage rates are based off of mortgage-backed securities, right? Mortgage-backed securities, they're moody, and they don't move on a first date. But that first date is gone and past. We are past the first date. We are like on date 4, 5, 6, 7. They know the bed. They need to make it, and they need to make sure that what they're doing is going to have substance to it and not just this rigmarole that they keep taunting to us, especially when, like you said, inflation is sticky. It's staying. It's at 2.7. That's fine. That's what we want to see. Even if it goes up a little bit or down, we're still under 3. I know that Fed, mark was 2%, but man, they got to adjust. If they're living like that, they should know by design that nothing's going to be perfect, but it's going in the right direction, and it's been maintaining that direction. That's the key. And the fact that they were so worried about the 80s repeating itself and having bounce back inflation. I mean, we're past 6 months of sticky inflation. It's not bouncing back. And if it is, it's because of the policies that you're not introducing.
It's too much, my friend. Hey, right now the spread between Treasuries and the MBS is wider than my jean shorts after Cruise Buffet.
Translation, even if bond markets flirt, mortgage rates are still recovering from the last relationship, and they bought emotional baggage like heavy carry-on. You said it perfectly.
Like that steamer trunk that you get on the Titanic. That big mother they brought in, had all the jewels, the paintings, all that stuff. It ain't working, guys. It ain't working. The violins are on the deck. They're playing. They're playing too long. Let's get done with it.
Agreed.
All right, you guys. But hey, real buyers hit pause and the market says bye. Had a client stop their home search. They said they were waiting for rates to get sexy again.
Let me guess. They got ghosted by the markets and the seller, right?
That is true. Exactly. That dream home sold. And now they think they're back in my inbox with sad emojis.
Yeah, moral of the story, don't treat mortgage timing like a rom-com. Treat it like a cruise book. Book early, get insurance, and for God's sake, bring documents. In other words, be prepared, be educated, and be confident, right? When you're going on a cruise, you're prepared. You've done your homework. You know what the amenities are. You know the destination, and you know the journey that it's going to take you on. The same thing with home ownership. You need to be educated. You need to be confident. You need to bring the documents, and you need to be prepared. Because like anything in the open sea, anything can happen, and you got to be able to make decisions quickly and efficiently. And in this market, anything can happen. We can wake up tomorrow, Manley, and rates could drop from what Trump wants, 3 percentage points on the Fed rate, which would see a 1.5 point drop on the interest rate. Can you imagine if
It
we
could.
went from 6.7 to 5.5? I mean, we wouldn't have enough assistants to be able to do the backlog of thousands of families who are wanting out there. And this inventory that we supposedly have in surplus would be wiped away in a week. It would be unreal. So, be prepared.
Be prepared. I mean, at the end of the day, right now, if the mortgage rates move down, as you were saying, they're not lockstep related to each other, but they do have an impact on each other. If we move that quickly, we would add 5.5 million buyers to the marketplace that would now qualify. If we got rates at 6%, we would get 5.5 more million buyers. The impact that that would have on our buying market right now would be catastrophic. So, people. The real cost of waiting for the one, it's not worth it. We need to keep moving forward. It's not going to happen that quick, but we need to pay attention. People keep waiting for the perfect rate. Meanwhile, home prices are rising like a karaoke confidence after 3 Mai Tais. Please.
Yeah, and inventory, just like people are waiting for the perfect rate, the inventory is tighter than the drawer in your kitchen you swear you're going to organize someday. It's not as plentiful and spacious that one would think. I mean, yes, we have more inventory post-COVID, but when you look pre-COVID and in a normal trajectory, we still have historically low inventory. And once these rates go down, bye-bye inventory and hello seller's market, bye-bye seller concessions, and hello paying over asking. That's not going to be a market that buyers were expecting to dip their toes into.
Even if rates drop later, the price will jump. It'll cancel out your so-called savings. It's like saving $10 on a cruise, only to end up with a room with no windows and a screaming toilet.
Yeah, what you're telling me, Manley, is stop dating the fantasy and marry the math. Like, I'm all about math because math never lies, right? Fantasy is not real. It's an island far away with a guy named Gilligan on it.
The math will set you free. Trust me, the math will set you free. All right, you guys. Your mortgage game plan, get cruise approved. Step 1, get reapproved. I don't care if you were pre-approved back in April. That's ancient history, my friend. You need to step up. Make sure all your documents are correct. Make sure you're prepared. Make sure you're working with the right lender that's giving you all the options.
Yeah, and with that step 1, you have to add step 2, which is reframe your expectations, right? A stable 6.7 rate with a solid home is way sexier than dreaming about a 5% rate like it's Ryan Gosling in a loan doc. That's just not going to happen. It's just not. I mean, hate to break it to you, but it ain't going to happen. So get off your butt, get out of the fantasy, and get with a solid home, and you'll get that sexier 5% rate, but you'll have it with a much better house than you were anticipating. And it'll be Ryan Gosling approved.
Don't be the buyer stuck on the dock with the selfie stick while the ship sails off with someone else's dream home. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. Share us on social if you can. Would love it. Well, folks, it's rapid fire buzzword time, Love Boat Edition, with Ryan at the helm.
Yep, let's make these short, my friend, or you're going to walk the plank.
Let's do this. Quick reactions, no thinking aloud. I'll remember.
All right, our first term for this week is 10-year dip.
Like they said, I love you and ghosted you. Or flirted with us and then went back to their ex. Hey, it dipped, but mortgage rates swiped left.
All right. Term 2 is inflation.
Yeah, inflation is like your ex that keeps texting, what you doing at 2 a.m. I mean, the thing is, inflation is normal, but it's a normal that keeps us in balance, right? We don't want to have deflation. We don't want to have inflation. So it's like a wavelength. We need to make sure we balance what we buy and what we sell, or we're just going to fall off a financial cliff. So inflation is that meter reader, so to speak, to say, hey, how are we operating here? What's the cost? Because what we don't want is the cost to be too cheap, but what we don't want is the cost to be too expensive. It's all about balance with inflation.
All right. Term 3 for this week is Fed pivot.
Ooh, a unicorn wearing a Fed hat. Basically, the Fed pivot is if they actually decide to take a dip with their toe in the water and take the Fed rate down. They're sitting here. We're looking for a pivot. We're looking for anybody to just make a move, blink, do something. That's a simple truth. And that's all I'll say about that. But not happening at your party right now.
Yeah, and a Fed pivot, I would say, is it's by design, right? And so Feds, they're all bark and no bite. they like to talk in order to make people react and move a certain way. And so a Fed pivot is basically them doing what they advised or doing what they didn't advise. And so when the Fed pivots, just know it's by design. It's not just by random.
Moving on.
All right, yes. Number 4 is MBS spread.
Hey, it's a long distance relationship, my friend. The MBS spread is basically the yield that we find ourselves in right now. That the gap has been bigger than ever, which means that everybody's hesitant. Everybody's defending themselves from a dip that's not happening, where rates are going to come down and they're going to lose their shirt because their gap is going to be too small. So this is a perfect indicator that we're out of balance right now because the gap is wide, total defensive mode, meaning that interest rates could be a tiny bit better, but the end investors are saying, no, right now I'm protecting my butt. I don't want to get caught with my pants down.
Yeah, man. I mean, we want closeness. They want space. Welcome to the spread. That's exactly what it is. And that trench is getting wider and wider. And, that makes them feel warm and fuzzy, but it's too conservative. We have to have balance. And so if that mortgage-backed security spread is too wide, in my opinion, Powell's just being way too conservative, and he needs to narrow that gap.
Truth. Next.
All right, this next one's a bit of a question, and that is there a rate drop coming?
Still waiting on that text back? Maybe next week. Maybe never. Like your college crush. Oh, geez. I don't know. That's a total prognosticator. I can't believe that it hasn't happened already. We've talked a lot about it in this episode already. I'm sitting here scratching my head. Anthony, you tell me. I think you guys know my position. It should have happened already, and it hasn't, and I don't know what to say.
Yeah, again, I think, this is a masterclass on how the Feds are using dopamine to move and to react. Dopamine is released prior to the event. And then once the event happens, the dopamine stops. They want people to react a certain way, knowing that the rate is going to drop. The one thing that we can say is it's not a question of if the rate's going to drop, it's when the rate's going to drop. So all of our listeners out there, they'll know, listen, this is not a case of if the rate's going up higher. The rates are definitely dropping. The question is not if, it's when. And Powell would like it to take 2 years, whereas the American people and the market is saying this better be done within the next 90 days. So I think what we're seeing now is we're seeing pawns be put in place for this chess game, and I do think the rate's going to drop. Do I think it's going to take 1 to 2 years to see? Yes, but don't expect the rates to drop it like it's hot, as in like 4%. We're going to see maybe low sixes by the end of this year. Low fours. That's our 2027 edition.
I'm giving you the party foul on that one right there because that ain't happening, my friend. That's not on the cue cards.
You could take that clip out and put it in our July of 2027 edition, because that's what we're going to be talking about, in my opinion, is rates in the 4s in 2 years, rates in the 5s in a year, rates in the low 6s by the end of this year. That's what I'm thinking.
That's what I'm thinking too, but I'm just hoping we get there. Again, this game of chicken that's going on, somebody's waiting for somebody to blink. Right now, the American people are the ones that are losing out. Let's move on to our next opportunity here.
I'd take a low 4, by the way. I would absolutely take a low 4. But our sixth term is TikTok mortgage hack.
The financial equivalent of eating Tide Pods. Looks fun. Ends in regret. Trending, yes. Trusted, absolutely not. This is what's going on right now. We are sitting here in this moment where we can't trust anything. It's unknown. Volatility still rolls. I know Anthony's saying that the rates are going to continue to go down, but don't be surprised if we have these little volatile upticks that are, move you an eighth up. We get some little, volatility in the market, some more information that comes out about something happening overseas, or more of our tariff conversation comes up and it gets stronger. Like everything's making this market react. And so, it's not a steady point to the bottom. It's going to be fits and starts. That's my prediction. But anyway.
Yeah, I agree. And just like you said on the TikTok craze, just because it has 1 million views doesn't mean it works. And they like shock and awe. They like, for shock effect. But what's the substance? Trust but verify. Make sure it's primary source info and it's not just someone's, regret or someone's opinion, because that's going to lead you down a road that is not based off of facts. And it could lead you down a road of fear, uncertainty, and, basically catatonic state of not doing anything. So trust, verify, get educated, Make sure you make decisions off sound information.
Did you bring up the deer in the headlights again? Because I know you love bringing that up. Because you know I'm going to put some deer standing in the middle of the road up in there in the B-roll.
100%. 100%.
All right, you guys. Hey, guess what time it is? It's Manley's Don't Be Dumb moment. Had someone tell me they're waiting for rates to hit 3% again.
That's like saying you're not going to propose to Jennifer Aniston until she becomes single and moves to your zip code. That's just not going to happen.
Oh, geez. Delusion is not a strategy, my friend. It is not a strategy. Hey, rate prediction tracker time. Captain's log version.
Yeah, I mean, let's take a look at it. The current 30-year fixed, we're still hovering at the 6.7, just like we saw last week. So it is just cruising along. We are not seeing any major changes. What do you see, Manley?
Well, again, I'm with you. We're in that stagnant pond water mode with the frogs are the only ones that are making it move when they jump in and out. The forecast range is still for us somewhere to 5.8 to 6.5. But Powell, our boy, hasn't RSVP'd to the rate cut beach party yet. Don't know what's going on there.
Yeah, I mean, a lot of people say he's not reading the room, but maybe that by design he's not supposed to, right? So the green line's flat, just like my abs after a cruise buffet. So in other words, don't hold your breath. There's a reason why he's acting the way he's acting. Let's hope that is for the American people's sake and it's not for any other reason. Only time will tell, right? We'll see what happens. We'll see if he's being too conservative or we'll see if he had other agendas at play. We're going to know over the next 30, 60, 90 days if we're in a better situation because of this waiting.
I hope the latter's correct and we're going to discover something that he is the smartest man in the room. He isn't sitting there like with his magnifying glass burning ants, and we're the ants, by the way.
Right?
So,
yeah.
Right. Sorry, that was really negative. And again, I'm not trying to get overly political with Mr. Powell, but you can tell I'm sort of at the edge of being fed up with this Fed nonsense.
We see this in cycles, right? But this time, there's big time ramifications that could last longer than the normal cycle. This could change the next decade if they don't do it right. So again, maybe that's the reason why they're taking their time. But sometimes if you take too much time, you could do more damage. So we'll see. What time will only tell.
It's kind of like driving on your flat tire too long. At a certain point, you're going to wreck the rim.
We're near 5 psi right now. Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Hey, I want to take you off the Captain of Negativity program that we've been talking about here and this Fed rate nonsense. And Anthony, tell me something super positive happened this week for you and your clients. Give me one of your big wins for this week, what you've doing. I know you're working hard up there, and you and your team are killing it as always.
I had a late night chat sesh with a client. They called me, and they said, we're basically at end of our rope. One of our trusted confidants told us to call you, and maybe you will show us the light, and proceeded to chat with them. And, they had a very small, on the island of Kauai, of like 600,000, which is not a lot. It's not a lot on this island when the average medium household purchase price is over 1 million. And so there's basically nothing. And they were looking at foreclosures, stuff without roofs, and it was just stuff without windows. And they're like, you think this will pass? I'm like, yeah, no. But then I proceeded and I said what no other lender asked them was, what's your story? Tell me your story. Let's not talk about applications. Let's not talk about amortizations. What is your story? And they proceeded to tell me their story. And in that story, I was able to listen and find out that their mother-in-law lives with them, has a pension after 30 years with, a company, has Social Security, has a job, and is contributing. And they didn't know that she can be a co-signer because they thought only spouses could co-sign. And so within a 20-minute conversation, we went from they can only afford 600 to now they can afford 1 million. And now there's like 50 houses that they can look at, and now the light is at the end of the tunnel. On top of that, they didn't understand that right now it is a buyer's market and they're able to get closing costs. So before, they were like, what are we going to do because we can't afford it? And they were wanting to put 10% down. I showed them, put 5% down, take the other 5%, pay off your car payments, pay off your credit card payments, save $1,800 a month. Now you can invest in a higher mortgage without that extra debt. So now they can afford $1 million house, even though it feels like they have a $600,000 payment. So I was able to take their perception, completely rewire it, so that way what was being injected in their thoughts is now facts and not off of fear. And now they're looking at 3 houses today that are upwards of $1 million, and they're going to have a payment that they thought was far more going to be far less, and they're going to be homeowners in the next 45 days, all because they took the time to chase a no. Most people would say, oh, my hands are up, there's nothing I can do. But if you just keep going, just keep swimming, then you're going to be able to find the solution. And that's what this family did. So that's my 24 hours awesome sauce motivational chat that I had.
All I can think of, Mr. Tom Cruise, is with me, without me. With me, without me.
Your life expectancy is like here. With me, it's here. Without me, here. With me, without me. With me, without me.
100%.
Hey, you did exactly what I talked about a couple weeks ago, taking somebody who's a lifer renter, restructuring, showing how we can alter their current debt situation, be open-minded, and now you qualify for X versus Y. And you know what we dealt with? And this is exactly what you just said. We're dealing with the what is, not the what ifs. We took them to the what is, and we explained to them in depth of how this will work. We restructured their current debt position and found out that they had more income than they even anticipated. And boom, there you go. Yahtzee. I love that story, man. This is what it gave me goosebumps. This is what I love about this industry and why I'm in it to win it, because I want to help those kind of people. I want to take them. I want to take that wide open look at their documents, talk it through, find out what they're doing, get the whole story and download it and make something happen. ChatGPT.
Yeah, the three other lenders that they spoke to treated them like a transaction, and they didn't understand their full story. So when they did the application, they're like, nope, this is all you're good for. This is all you're good for. It was very one-dimensional. They said that was the first time that someone actually talked to them and asked them what their story was. And that's where you find the pay dirt. When you ask the questions and you understand the foundation and the backstory, you tend, because these clients don't know what's best for them. They don't know the guidelines, the overlays, the what's needed. That's where we come in to really understand how can we fit this peg into the hole in a way that's going to make sense for them. They didn't know. They were sitting on pay dirt this whole time, and they've been shopping for 6 months and trying to find something. And so it's cost them 6 months. The good news is they're jumping on the bandwagon now. They're not on the sidelines, because now they're knowledgeable, they're educated, and they're confident.
Love that story. Hey, buddy. The motivational close today, the captain's toast is love is weird, mortgage rates are weirder, but action always beats hesitation. That's what we're talking about over and over again. Be prepared, take advantage of the opportunity. Preparation meets opportunity. Create your own luck.
Yeah, man, the perfect rate, that's a myth, right? That's fantasy island. But preparation, that's real power. That's where the secret is.
Get reapproved, make your move. Stop waiting for the love boat to dock at Fantasy Island, my friends. That's all that we can say. Like, just do something. Talk to the right people. Trust. Have some trust in who you're working with.
Facts.
Anthony, it's been wonderful. We'd like to ask our viewers out there to take a moment to like, follow, subscribe, DM us with any critiques. We're here. We're listening. We want to know if you'd like some specific topic, if you'd like to know something in specific about the mortgage industry that we're not covering, or keep watching your Zillow listings like it's a soap opera. We hope that helps.
Mahalo,
Aloha,
Manley.
brother.
It was great chatting with you.
Great chatting with you, brother. If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Manley.
What?
Knock, knock.
No.
Oh, yeah. Knock, knock.
Party foul.
Knock, knock, Manley.
Oh, geez, Louise. Who's there?
Jerome.
Jerome who?
Jerome, sweet home, but not with that loan. Your rates turned my house into a zone I can't own.
Oh, Lord almighty. That is way too funny for me. That Jerome Powell is a bad actor.